This is.
I'm not going to say the 2 and 1.
Yep.
Okay.
This is live?
10.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio of Archie Ravishankar, who's the CEO of Cogni. We're going to discuss bridging Web2 and Web3 in banking, why interoperability is key to building America's super wallet. It's great to have you with us, Archie. Welcome to Trade Talks.
Thanks, Jill, for having me here.
You got it. How and why will non-custodial wallets be the difference maker in restoring consumer confidence in the crypto space?
Yeah, so what has happened in the last years, you have seen a lot of centralized exchanges go bust, which means that centralized exchanges tend to have the crypto assets in their custody. So while consumers buy Ethereum or Bitcoin, the centralized exchanges took it under their custody and they were arbitraging. And they lost a lot of money with the volatility. In a non-custodial wallet, a user would be able to have those assets within their own custody and their identity. So this allows them to have a complete control of their own digital assets and having a third party using it. And the reason why non-custodial wallets haven't really taken off is because the user experience has been very bad. Now, in the last few months, non-custodial wallets companies have taken a very significant step in restoring consumer confidence by creating a user experience that allows them to manage the crypto within their own custody.
Why do you think there is such an issue with some of the major crypto exchanges, the centralized ones anyway, because they're acting as custodian, clearing? I mean, in traditional finance, the infrastructure is a little bit different. All these things are separated out. Do you think that's part of what the issue is when it comes to centralized exchanges?
I think the regulations hasn't given them a clear sight on what they can do and what they cannot do. Which has been prominent with traditional banking. Traditional banking is a lot more established. Banks know what they can do and what they cannot do. Technology has exponentially grown within the blockchain. And because the regulations has been very unclear, these centralized exchanges were, they became a little bit more hungry in arbitraging people's crypto assets. And when the prices go down because they did not have really good controls, or anyone else that was monitoring them, and it went in pretty pear-shaped very quickly and very fast.
So explain to us what a super wallet, a super app is. Does that mean you can have all of your finances and perhaps even shopping in one space?
Yeah, that would be ideal, isn't it? So, while other platforms in other countries have created super apps, the reason why we haven't had that in the United States is because, we have had a well-developed app ecosystem here in the United States. Within the Web3 world, what happens is the most important thing is identity. Now, in traditional banking, for example, banks created products that they thought consumers want. In Web3, it's all about creating products that what people need. So the most important thing is able to authenticate your identity across multiple applications. Now, while we use all our Web2 applications in a much more normal way, if we could take that identity and create this as a service for all Web3 applications, because you'll have to passport your identity from Web2 to Web3 applications. And if you could do that in a much more simpler fashion, I think it can create an interoperable experience that allows user to take the identity into multiple siloed applications that they're currently using and provide a much stronger and easier, convenient user experience.
So it sounds like identity and interoperability, the two I's, are key.
Very, very key. So for example, in Denmark, you have something called NemID. In Sweden, they have something called the Bank ID, a single identity that could connect disparate services that allows user to get a much better user experience. And the banking identity is the most important form of identity after your passport. Mm-hmm. It accounts to roughly 20 points if you have to go and get any services that you need. Now, if you could passport that identity into the Web3 world, identifying who the user is in a lot more simpler fashion through the wallet, then it could potentially create a much larger ecosystem of other apps that could be built on top of it.
Why can't we just use our social security numbers here in the US?
So who is the custodian of the social security number? Are you going to give it to a random person to put it on a blockchain, or are you going to give it to a regulated entity that already has your social security to provide a certain service? And now the most important thing you will have to understand is that people don't want to share all that information to everyone else. So now what's happening is if you have to go get a service for a car rental or anything else, every time you will have to provide for the identity. You might not want to share all the information, but you want to share a certain information that is required. right? So while a financial institution have access to all the information, a potential identity solution like zero knowledge proof, for example, if that could, those data sets could be corpused in a way that a service provider can get the information, only information that they need to provide a service, it's a lot more valuable than providing every information all the time to every service that we're using.
I could certainly appreciate that. Appreciate the insight. Archie, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much for